I think if you see, of course, Belgium and the Netherlands are a little bit a different market, I have to say. There are another part of international investors present in Belgium or in the Netherlands. On the other hand, I think if you see from our clients, there is a little bit of difference between the international investors and the more local, if I can say so, investors. And you see, of course, and the trends, still offices on A locations are quite interested and wanted for international investors. I think there's an open door in a certain way. Shopping centers are still quite interesting, and everything on the health sector. On the other hand, if you look more to the other cities, we see a lot of developments in other sub-cities, if I can say so, mainly driven by local, if I can may say so, in a certain way of the history of a local background. As you say in Liège, you see them in Antwerp here in Belgium, you see them in Kortrijk, you see a lot of redevelopment and a boost in that kind of investments.
Happily, we decided to quit the office market 4 years ago. So, but what I can say about the office market in the Netherlands, and in fact it counts for most investment classes in real estate, is that the difference between good and bad is becoming much bigger these days. So currently there have been kind of auction for office portfolios in the Netherlands, which have really led to dramatic price drops of 40, even 50%. With large write-offs of loans of banks on these office portfolios, and on the other hand, in the retail market, you see that on high street locations, inner cities, there's even an upward price pressure on retail investments. But as soon as you come in the secondary areas or in the secondary streets, you see that it's even hard to sell a project or to develop a project. So the distinction between good and bad is so enormous these days. So it really comes back to the basics of real estate development, and that's finding the best locations.